While Donald Trump is slapping tariffs on Canada and cutting off trade talks, Mark Carney just quietly pulled off the most brilliant economic chess move of the century. What happened in the last 2 weeks in Southeast Asia proves that everything we thought we knew about Canada-US relations was wrong. I'm covering the story that mainstream media is completely missing, and in the next 12 minutes, I'm going to break down exactly how Canada just secured its economic future while leaving Trump scrambling to catch up, why this $300 billion Asia strategy changes everything, and what this means for every Canadian's financial future. Let me set the scene for you. Just 6 days ago, Trump was celebrating what he thought was a major victory. He had just increased tariffs on Canadian goods by another 10%, suspended all trade talks with Canada, and was bragging about bringing Canada to its knees. On November 1st, 2025, Mark Carney even had to publicly apologize to Trump over an anti-tariff advertisement that had infuriated the former president. Most people heard about this and thought Canada was backing down, showing weakness. But here's what they missed. This wasn't capitulation. This was strategy. And while Trump was busy gloating about his tariff wins, Carney was 8,000 miles away in Southeast Asia, quietly orchestrating what economists are calling the most significant trade realignment in Canadian history. To understand why this matters, we need to go back to what's been happening behind the scenes. Because what Carney accomplished in Asia didn't start with his apology to Trump. It's the culmination of a master plan that's been months in the making. Here's what's really happening. While Trump has been weaponizing tariffs against Canada, imposing additional 10% tariffs, and cutting off bilateral trade negotiations, Canada has been quietly diversifying its economic partnerships in ways that will fundamentally reshape North American trade dynamics. The data tells us Canada-US trade represents about $900 billion annually. That's roughly 75% of Canada's total trade. For context, that means Canada has been dangerously overdependent on a single trading partner who's proven increasingly unreliable and protectionist. But here's where it gets interesting. While Trump is dealing with domestic inflation pressures from his own tariff policies and growing pushback from American businesses hurt by the Canada trade war, Carney has been systematically building what industry insiders are calling the Asian alternative. Now, most analysts are missing the real story here. They're focused on the surface narrative of Canada apologizing to Trump, but the real impact is that Canada just secured economic independence from American trade volatility. Here's why this matters more than people realize. First, this isn't just about trade diversification. It's about economic security. Internal documents reveal that Carney's team has been modeling scenarios where U.S.-Canada trade could drop by 30 to 40% due to continued tariff escalations. The Asia strategy provides a buffer that didn't exist before. Second, the timing is absolutely brilliant. According to market data, ASEAN economies are projected to grow by 4.2% annually through 2030, while the U.S. economy is forecast at just 2.1% growth. Canada is positioning itself in the world's fastest-growing economic region, just as American growth slows. Third, and this is what nobody is talking about, Canada is leveraging its clean technology and critical minerals exactly when Asia is desperate for these resources. The numbers don't lie. Asian countries need $2.3 trillion in clean energy investments by 2030, and Canada controls many of the world's largest reserves of lithium, cobalt, and rare earth minerals. While Trump thinks he's punishing Canada with tariffs, he's actually accelerated Canada's pivot away from U.S. dependence. Economic data shows that for every dollar of trade Canada loses to U.S. tariffs, the Asia strategy is positioned to replace it with $1.40 in new Asian trade within 3 years. The ripple effects of this are already starting to show. In energy sectors, Canadian LNG companies are securing 20-year supply contracts with Asian buyers, reducing reliance on volatile U.S. energy markets. In technology, Canadian AI and clean tech firms are gaining preferred access to Asian markets worth $400 billion annually, markets that were previously dominated by American competitors. For Canadian workers, the government projects this Asia strategy will create 100,000 to 80,000 new jobs over 5 years, particularly in manufacturing, resource extraction, and technology services. But here's what nobody is talking about. The geopolitical implications are staggering. Force Canada into submission and renegotiate NAFTA on terms favorable to the U.S. Instead, Canada is about to become significantly less dependent on American trade, which means significantly less vulnerable to American economic pressure. The numbers are absolutely incredible. According to projections from Carney'S recent budget, by 2030, Asia could represent 35% of Canada's total trade, up from just 18% today. That's a complete rebalancing of Canada's economic relationships. Most people don't realize this, but Trump's tariffs may have just triggered the end of Canada's economic dependence on the United States. What started as economic punishment is becoming economic liberation. So where do we go from here? Based on the patterns I'm seeing and insider information from government sources, here's what I predict. Short term, next 3 to 6 months. Canada will finalize at least 2 bilateral trade agreements in Asia, while trade tensions with the U.S. continue to escalate. Watch for major announcements from Canadian resource companies securing long-term Asian contracts. The key indicators to watch are Asian trade as a percentage of total Canadian trade, new foreign direct investment from Asian countries, and most importantly, how quickly Canadian businesses adapt to serve Asian markets. Let me wrap this up for you. What we learned today. Mark Carney didn't just apologize to Trump. He executed a brilliant strategic pivot that positions Canada for long-term economic success independent of American trade volatility. Why it matters. This $300 billion Asia strategy doesn't just diversify Canada's economy. It transforms Canada from a junior partner dependent on the U.S. into a sovereign economic power with global options. What to watch for. The speed of Canadian business adaptation to Asian markets, the flow of Asian investment into Canada, and how quickly this reduces Canada's vulnerability to U.S. trade pressures. The bottom line is this. Trump thought his tariffs would bring Canada to heel. Instead, they triggered Canada's economic independence. This isn't just a news story. It's a fundamental shift in global trade relationships, and Canada just positioned itself to win big, while the U.S. isolates itself through protectionism. The implications are staggering. Within 5 years, Canada may be significantly less dependent on the United States than at any time since Confederation. That's not just economic policy, that's national transformation. What do you think about this development? Are you excited about Canada's reduced dependence on U.S. trade, or concerned about the risks of pivoting away from our largest trading partner? Drop your thoughts in the comments below. I read every single one, and this is exactly the kind of economic shift that affects every Canadian family. And if this analysis opened your eyes to the real story behind the headlines, subscribe and hit that notification bell so you don't miss our deep dives into the economic moves that actually shape Canada's future. Thanks for watching, and I'll see you in the next one where we'll break down exactly which Canadian sectors will benefit most from this Asia pivot.